Hey, Bill Soriano here from Pittsburgh. It's about 1:14. I don't know if there's a problem with Facebook Live videos. I tried making one about 35 minutes ago to show you what was going on in the market, but it doesn't seem to be showing up. So I figured I'd just do a video here and then upload it to Facebook. But anyway, looking here, and again, remember, there's two types of trades we're looking for now. On the 15-minute charts, we look for the impulse candle, and on the 1-hour charts, we look for what's called the looking glass trade. Now, the information on both of these trades will be in the paid group once it's ready to go. I want to make sure everything's in there, everything's done correctly before I charge anybody for it, even though it's only going to be probably $15 a month to have access to the paid group. There may be like an annual option that you could pay $50 for the whole year, but it's not going to be a lot of money. But I want to make sure everything's in there before I actually charge anybody for it. So right now we're going to scan on the 1-hour chart, because that enables us to find both types of trades. And you see we have our average daily range indicator on here, and in GBP JPY, the average daily range was not met today. So we're going to just scan through here, and we see now on EUR JPY, we did get an average daily range to the downside. Okay. So what are we looking for? We're looking for an impulse candle. Okay. So we have to find the impulse candles on the 15-minute chart. So we're going to go back to the 15-minute chart. We see the move down. This candle right here is the candle that breaks, that meets the average daily range. But we can see the impulse candle, remember, has to be 50 pips or at least half of the average daily range. So in this case, it would have to be 45, 46, 47 pips with an average daily range of 94 in EJ here. And we just don't have that. We just don't have an impulse candle. Okay. However, you can see that it makes the move down. The average daily range is met, and then look what happens. The next three candles go up over 50 pips. Okay. So we're just looking for this candle here or the one right before it to be a little bit bigger. And that tells us that conditions are right for us to go ahead and get in. Okay. So I wouldn't have taken this trade, but you can see what happens. The next three candles go up over 50 pips. Okay, so that's an impulse candle trade. We're going to go back to the 1-hour chart here. Now, this is another trade that goes through the average daily range to the downside. This is AJ. We're going to look on the 15-minute chart. Once again, AJ has an average daily range of 80. We're looking for a 40 pip candle. And again, we just don't get it. It's about 27 pips right there. So not quite enough to be an impulse candle. The one right before it isn't enough either. But again, had they been a little bit bigger, we would have taken that trade and we would have gotten 50 pips in the next three candles. Same exact thing. You're going to see the same thing in all of the yen pairs, right? This is the Canadian yen pair right here. Same thing. We look on a 15-minute chart, we see that move down. This candle meets the average daily range, right? Breaks that average daily range line, but it's not big enough to be an impulse candle. They're just not big enough to be impulse candles. However, you do get the move up that we're looking for right away, right? 3 to 4 15-minute candles, and you would be out of that trade. So now let's look at, again, the same thing happens in NJ. Go to the 15-minute chart. Well, actually, NJ does not meet the average daily range. The average daily range is not broken in NJ. Let's go to a couple. This is our new trade. This is our looking glass trade. Okay, so we need the 1-hour chart for the looking glass trade. And basically what we do, we use the Fibonacci retracement tool for this. That's right up here on your MP4 charts right here. That's the Fibonacci retracement tool. What we're looking for here is we're looking at the previous day, which is right here. This is the 1-hour chart. This was the start of today, 5 p.m. Eastern time, actually yesterday, right? And here we are right now. So what we're looking for is we want to see this, we want to see where this opens the day and where it closes the day. And we want to have at least 25 pips in a particular direction, either up or down, 50 pips on the pairs that have an average daily range of over 100 pips a day, right? 40 to 50 pips on those. Anyway, if we measure from here where this closes, or where I should say where this opens the day to where it closes the day, right? We're right about at 21 pips. So it's actually, I meant to say 20 pips for the normal pairs, and then you're looking for 40 to 50 pips on the pairs that have an average daily range over 100 pips a day. NU only averages 67. Okay, so what we want to do is we want to get our Fibonacci tool, and all the videos are going to show you how to do this, but just real quickly, I'm going to show you what I do. I go, since this made a move down, I go from the high of the day to the low of the day. Okay, now what I look for is now you have these levels going up the side here. You have the 23.6, the 38.2, the 50% retracement, right? The 61.8 and the 100%. Okay, so the 100% is the high and the 0 is the low. 50% retracement's right in the middle. So what we're looking for in the looking glass trade is we're saying that if this made a move down yesterday, we're going to look for it to do the same thing today. But first we need some type of pullback. So the first criteria is we look for this to close the day inside of the 23.6 and the 50% area. And it does do that right here. Then what we look for is we look for a move back, a pullback to the 61.8. We want to get a good pullback to the 61.8 before we try to take this back down. Our stop loss is always going to be at the 100% level. Okay, so as you can see here, we get the move up to the 61.8, and that's where we would get in. We would set a sell limit order right at that 61.8 level. And then our stop loss on that would be up here at the 100 level, which you see it does make a move up, but it doesn't hit that 100 level, so we wouldn't get stopped out. And then our take profit is going to be down in between the 23.6 and the 0 level. Okay, so right about halfway down here. So that gives us a little bit more on our winning trades than we lose on our losing trades. Okay, and that's what we're looking for. We need at least a 1-to-1 ratio, but we want to get a little bit more. So this isn't quite a 1.5 or a 2-to-1, but it's a little bit more on the winning trades than we lose on the losing trades. And so when this pulls back to this 61.8, that's where you would get in. Okay, now it would move up, and then it makes its move down, and you would get out down here with a 42 or 43 pip profit, right? So that's one of the trades that I believe I took today. The other one is GBP-NZD. Okay, so we're going to look at the same thing here real fast, and then this is going to be the last one we look at for today here. So yesterday it made a move up, right? If we measure from where it opens, right, the day to where it closes the day, we get 80 pips. So that's a good move up, right? We're going to take our Fibonacci retracement. We're going to take it from the low up to the high of that day. Yesterday, right here. Now we want to see, does it close in between the 23.6 and the 50? Yes, it does, right? Actually closes right on the 50. So we're looking for that pullback now to the 61.8, and then we're going to take it up. We're going to watch it go back up again. So again, we get the pullback to the 61.8. Our stop loss is down here. We don't get stopped out. We don't get stopped out on this one. And so what you're looking to do is you're looking to get in here with a buy limit order, and then you're going to get out right about here with a 90 pip gain. Okay, so we actually ended up getting a little bit less than that. And of course, when you get in here, your risk on this trade is 70 pips, about 70 pips. So we're getting a little bit more. We want to get a little bit more on the winning trades than we lose on the losing trades. Okay, So this is the looking glass trade trading strategy. I showed you the impulse candle. We didn't quite have any today, although we had a couple situations where we almost had one, and the currency made the move we were looking for, 50 pips within 3 or 4 candles. That happens all the time, guys. Okay, and now we're looking at the looking glass trade, which where we analyze the price action the day before, and then we look for it to move the same way the next day after it pulls back to the 61.8 level. Okay, now guys, these trades work all the time. Okay, but I'm going to continue monitoring everything, and eventually, pretty soon, probably within the next couple weeks, definitely by the end of the year here, I will have all the videos in the paid group ready for you to go, so you can get in there and you can join. You get access to the videos. Again, it's only going to be about $15 or $20 a month. There'll be an annual option of $50 or $60 to pay up front for the whole year, and that's all it's going to cost. So again, Bill Soriano from Pittsburgh. Make it a great day trading Forex.